The next subject that we're going to talk about is going to be filing status. You will find the information on this in your publication 4012 under tab B, starting with page 8, and in your publication 4491, it is chapter 4. We have 5 different filing statuses, and most of them you will determine whether the person qualifies or not based on whether they are married or unmarried or considered unmarried on the last day of the year, which is December 31st. And your job is to choose the most advantageous filing status that the taxpayer qualifies for. Determining the correct status is a critical component in preparing the tax return because it affects the amount of tax as well as other credits that the taxpayer may be entitled to, which ultimately affects the amount of refund or the balance due that's going to be reflected on the tax return. So we will discuss each one of the filing statuses separately. The first one that we're going to talk about is single, and it's saying not married. This could be a person who's never been married or a person who's been married but is legally separated or divorced, or a person who was widowed before the beginning of the tax year and did not remarry. Now, all unmarried people will not file as single. It's possible that this unmarried person could qualify for another status that is going to be more beneficial for them, such as head of household or a widow or widower with a child, and we'll be discussing those momentarily. The next status that we'll talk about is married filing jointly. This could be married people who are living together, or they don't have to be living together. They could be living apart, but they're not legally separated or divorced. We also have, in addition to traditional marriage, we have what's called common law marriage. Texas is a state that acknowledges common law marriage. We also have same-sex marriages. There is a nationwide law that says same-sex marriages will be considered as marriage, can be filed jointly. Okay, we also have a surviving spouse who did not remarry before December 31st. On a joint return, it's an election. A married couple does not have to file jointly. They can elect to file jointly or separately. But if they are going to file jointly, which is the status that we're speaking of right now, they are going to report all of their income for both of them and all of the expenses on the one tax return. And they both are responsible for the information that is on that tax return. They can file jointly even if only one of them had income. They can still file a joint return. Okay, they must both have either a social security number or an I-10 for you to prepare the return for them. The next status that we will talk about is married filing separately. Okay, this is a person who is married, but they choose to file a separate return, or they cannot agree to file a joint return. This one is out of scope for us. Also, sometimes when we have people who come to us and they want to file separately, we kind of try to educate them to the fact that filing separately could cause them to wind up paying more taxes because it disqualifies them from most of the credits that are allowed on the tax return, which could reduce their taxes and increase their refund or decrease the amount that they would owe. If they insist they are still going to file separately, then we would have to tell them that we're not able to prepare the return for them. A lot of them will say that they're married, but they don't know where the spouse is. They come up with different scenarios. But in most of those situations, if they have not gone through the courts to get a legal separation or divorce, if they are married and not filing together and don't qualify for one of the other statuses that we will talk about in a moment under special circumstances, then we would not be able to prepare that return for them. The next filing status that we'll discuss is head of household. This is the person who is unmarried or considered unmarried on December 31st of the tax year that we are preparing the return for. In addition to being unmarried or considered unmarried, they have to have paid more than half the cost of keeping up a home for the required period of time, and they had to have a qualifying person living in their home for more than half of the year. We have to warn them that only one person in the residence can file or qualify as head of household. Quite often we have people that come in and there's more than one adult living in the home who may have a qualifying person. In other words, they have dependents, but only one of them is going to be considered as paying more than half the cost of keeping up the home. Sometimes neither one of them are paying more than half. I've had them say, well, we split everything down the middle. Well, if that's the situation, nobody's paying more than half the cost of keeping up the home, so they would not be considered as head of household. Also, we have the situation where people say, well, I'm the only person in my home and I pay for everything, so I am the head of my household. That may be true in a sense, but for tax purposes, you do not qualify for head of household filing status. The next status that we will talk about is some additional things for the head of household. Okay, they are going to be filing a separate return for this from the spouse. They had to have paid more than half the cost of keeping up their home, and to be considered unmarried, even though they are still legally married, they had to have lived apart from their spouse during the entire last 6 months of the year. And they had to have provided the main home for more than half the year for that dependent child, stepchild, or foster child. So in this situation, that is that exception to the rule that they actually are married, but they can be considered unmarried for filing head of household. Okay, one of the main benefits for filing the head of household versus single or married filing separately is that the standard deduction is higher for head of household. Therefore, it reduces the amount that they're going to pay tax on and ultimately reduces their tax liability and possibly increases the amount of their refund or decreases what they owe. Can also help to qualify for them for some additional credits. Okay, several times we've mentioned paying more than half the cost of keeping up your home. And sometimes your client or your taxpayer does not really know the answer to that right off. So we have in your publication 17, and we usually make copies of these and provide them to the clients, this little sheet that helps them to determine if they paid more than half the cost of keeping up the home. Okay, if you look at the form, it shows property taxes, mortgage interest, property insurance, and the fair rental value with the little asterisk. So you cannot claim the property taxes, the mortgage interest, and the insurance, and the fair rental value. You choose one or the other. Under the current proposed regulations, instead of actually taking a portion of the taxes, the interest, and the insurance, you can use a portion of what would be considered the fair market rental value that you would put down as the cost of maintaining the home. In addition to that, you can add the utility charges and the amount of food that was eaten in the home. So you're going to compare the amount that you paid, the client that you're working with, compare the amount that they paid to the actual cost to see whether they paid more than half or not. Okay, we also talked about having to have a qualifying person to live with you. Okay, so when we talk about a qualifying person, you have a little chart in your 4012 that helps to make that determination. Okay, first of all, if the person is your child, such as a son or daughter or grandchild who live with you more than half of the year, and they are single, then that person is a qualifying child for head of household filing status, even if you cannot claim them as a dependent. Okay, we have that same person, but instead of being single, that person is married, but you can still claim them as a dependent. Then they can still qualify you. Okay, that same person, that same child, if they are married and you cannot claim them as a dependent, then they do not qualify you for head of household. Okay, we drop down to the next category of persons, and that is going to be your father or your mother. Okay, if you can claim them as a dependent, then they are a qualifying person. If you cannot claim them as a dependent, then they are not a qualifying person. Now, when we were talking about head of household, we spoke of them having to live with you more than half of the year, but there is an exception to that rule. If the person is your mother or your father, they don't actually have to live with you, but again, you do have to have paid more than half the cost of maintaining the residence where they did live. So if they're your dependent, even if they didn't live with you, but you paid more than half the cost of maintaining the residence or the property where they did live, then they can qualify you for head of household. But if they are not your dependent, then they do not qualify you for head of household. We drop down to the third category of person. It's a qualifying relative other than your father or mother. First of all, they must have lived with you more than half of the year, and you have to be able to claim them as a dependent, and they have to be related to you in one of the many classes that are listed in that middle box there. And I think we've gone through that and tried to see who is excluded because so many relatives are included. And I think it pretty much includes everybody except a cousin. And you'll notice on this they have to meet all three of those requirements. They had to live with you more than half the year. You have to be able to claim them as a dependent, and they have to be related to you. In that case, they can qualify you for a head of household. The next little section in the middle of the chart there, this qualifying relative, if he or she did not live with you more than half of the year, they don't qualify you for head of household. If they are not related to you in one of the ways that was listed above, they do not qualify you. Okay, and if you cannot claim them as a dependent, then they don't qualify you for head of household. Now, sometimes there are people such as a friend or another acquaintance or somebody that lives with you all year, but if they are not related to you, even though they did live with you more than half of the year, you're not going to be able to qualify for the filing status head of household. Okay, qualifying widow or widower. This is a person whose husband is deceased, but in the year that the spouse died, they must have been entitled to file a joint return with that spouse, regardless of whether they did actually file jointly or not. Okay, the spouse must have died in either of 2 of the prior years. So in this case, we are actually doing the current year of 2020 tax returns. So this would be someone whose spouse died in 2019 or 2018, the 2 prior years before we got to 2020. They must not have remarried before December 31st of the current year. They must have a child, stepchild, or adopted child who does qualify as their dependent, who lived with them in their home all year. And your client must have paid more than half the cost of keeping up that home. In that case, this is a very good filing status for the individual that you're helping. If they qualify for it, it's even better than the head of household because they actually get to claim the standard deduction for married filing jointly, which means that they're going to pay tax on a smaller amount of their income once they subtract that standard deduction from their income. Okay, we have a little question here. Jane's husband moved out of their home in February of the tax year. In this case, that would be 2020 if for the current returns, and has not returned. Jane provided all the cost of keeping up the home for herself and her two dependent children. Jane refuses to file a joint return with her husband. What filing status should she use? And keep in mind that there may be several that she could use, but we want to decide which one is the most advantageous for her. Which one is going to cause her tax to be less on her tax return. So we'll take a moment, let you think about that, possibly go back through some of the slides to figure out which would be the most advantageous for her that she does qualify for. Okay. Okay, so the most advantageous filing status in this situation is going to be head of household. Even though Jane was still married to her husband, she meets the requirements to be considered unmarried for that filing status and qualifies as head of household. Although technically she could file as married filing separate, it would not be to her advantage to do so. Her taxes would be more. She would lose out on a lot of the credits that she would be entitled to, such as possibly the earned income credit, child tax credit, additional child tax credit. So we would definitely want to do head of household for her filing status.